Right, team. How is everyone doing? Let me get something started. Perfect. Yes. Oi, oi, oi. It's been a long time. Let me see what everyone's saying. What's up, Amir? What's up, Victor? Hello. How is everyone doing? Happy New Year's, everyone. Happy New Year's. They're from South Korea. Phew, that's a very far away. Love it. How is everyone doing? Hope everyone had a happy new year. Happy New Year's. I hope everyone is safe. Didn't do anything crazy with fireworks. Happy New Year to all. Peace and prosperity this 2024. Let's go for it. Going to be a big year. Big opportunities ahead, of course. Like any other year. Going to be a very important year. What's up, Ari, my man? What's up, Curtis? What's up? Hello, Mike. Hello. 13 grand this week, thanks to you, Aro. That is crazy. That is a crazy way to start off 2024, Devin. And that is all up to you. That is all credits to you, my friend. How are you doing, Michelle? How are you doing? Glad to see you here. Glad to see you, Hope. Very happy Hope is back as well. Love to see it. Eric, Happy New Year. Happy New Year, Eric. Love to see New York City here. Oi. I would love to visit New York City. Would love to visit it. Dollar looking good for next week. Exactly my thoughts as well, Gabriel. Exactly my thoughts. Happy New Year, Hassan. Happy New Year. Love it. Analysis for gold. I'm confused. We'll go over it. No worries. NASDAQ as well. We'll also go over NASDAQ. No worries. From Morocco. Love to see it. I can't hear you. You can't hear me? Can everyone hear me? Let me know if everyone can hear me. Otherwise, you might have to check your volume as well. Are you Dutch? Yes, I am very much Dutch. Yes. Are you for president? I don't know if that would be a good idea. Your sound is really bad. Let me check. Can hear? Is my sound bad? We can hear you. All right. Perfect. We are hearing. Perfect. Chip, then it might be on your side, my friend. Might be on your side. Let me see. Albania, let's see. Algeria, of course. Love to see it. You like Max Verstappen? Of course, I'm Dutch. I have to like him. No. Yeah. Sounds great. Perfect. Thank you for letting me know. Thank you. So, how has everyone been? It's been a while, actually. It's been a while since we've done a live stream. When was the last time, actually? I'm not too sure. I am not too sure. You didn't check my addition to your theory. I asked it a few times during your last streams. Oof, Alexander, then we have to go over that this stream, I reckon. If we first go over the forecast, then after we can go over it. When we be going through gold, I have to use the shitter real quick. Go use the shitter, my friend. Go use the shitter. We'll go over gold, what is it? Around there. So we first go over all these. So if you go right now, then you'll make it. Excited for the knowledge to come this year, Ari. You've raised my awareness on the charts. Love it. Love to hear it. And market mastery is going to be a huge one. Market mastery is going to be a huge one. A huge series. So hopefully, well, of course, yes. I hope it will top, what is it? A to Z guide. 100%. How are you doing, Ari? I'm doing great. Thank you for asking. Thank you. How are you? I'm from Lebanon. Where are you from? It's being my first time here. Thank you and welcome. Welcome to the stream. I am from Amsterdam. I am from the Netherlands. I'm currently in Colombia though. So I'm located actually in Colombia. Ajax, PSV or Feyenoord? Now we are getting to the most important question. So which football club do I like the most? Well, depending on what we are talking about. If we're talking about international, then I'm for any Dutch club. As in if we're talking about Champions League, any Dutch club for me is fine. But for national, so for actual Dutch competition, I like PSV the most. You always got to support the somewhat underdog, right? What broker do you trade with in the Netherlands or anyone from? I trade with IC Markets mainly. IC Markets, if I don't use IC Markets, I use Interactive Brokers. That is IBKR. You can connect that actually with TradingView as well. How's Colombia? Colombia has been treating me very well. I'm in a very calm place as well, so absolutely love it here. I'm from Colombia. Love to hear it. Don't get scammed by the girls in Colombia. No. You won't see me outside. But nothing really changed, you know. For me, it's always funny. I'll tell you my quick life story before I actually dive into the charts. I work a lot, so I really don't go out at night or anything. I just work. So wherever I go, I just need my desk, my desktop, and I just sit behind the charts and I just work. So for me, there's nothing really changes in that sense. Very funny. And Colombia is beautiful, and the food is absolutely perfect. It makes me feel a lot better than in the Netherlands, so I like it a lot. A lot of South Africans here. Yes, there are a lot of South Africans as well in the chat always. Always. NASDAQ FC is my club. Love it. If NASDAQ FC were to combine and were to create their money pool to buy some players, they would be the best football club in the world, I reckon. Guten Tag aus Deutschland. Love to see it. The Germans are also here. What brought you to Colombia? It's quite a long story. My girlfriend is from Colombia. I didn't meet her in Colombia. I met her in the Netherlands. But after a while, I was thinking maybe it's time for something new, because we obviously want to always fly back and forth to meet her family as well, to see her family. Then it would be cheaper for me to actually live 6 months in Colombia than it would be cheaper to live 6 months in the Netherlands, because in the Netherlands is like, poor. The Netherlands is in a crazy state, to be honest. Can you talk Spanish? No. It's very little. So I'm still working on it. I have my classes actually on Saturday, Spanish classes. So that's mainly it. A few things going into the thought process on moving to Colombia. All right, from Italy, and Happy New Year. Happy New Year, my friend. Happy New Year, Francesco. Italy, also a beautiful country. All right, let's go over forecast. So first of all, let's go over the dollar. Actually, I haven't been too active. As in, what I mean by that, during this time, I also always like to sort of clear my mind to get ready for the new year. When I get ready for the new year, I just have in my mind, I need to perform a full year. So I want to take a break to be ready for a marathon, not a sprint. So a marathon, meaning that I want to filter out the highest probability price action during 2024 to capitalize on it and to hopefully reach again a great amount of profit in 2024. Now, to share as well, might be fun to share with you that I made around 40% profit in 2024. So that is absolutely perfect for me, and I love it. Nothing really that I did wrong in 2024. Maybe in the beginning of the year I could have made some or left some profits on the table. Here and there, what I try to evaluate as well is, did I miss any trades that I should have caught? That is mainly my importance. Then I take that with me in 2024, prepare for 2024, because I want to, again, hopefully exceed that profit amount. Could be great, or maybe a little bit less, maybe a little bit less. It's still 40%, so it's absolutely perfect. Now, 2024 is where I want to focus on not missing any setups, because in 2023, I mainly, or well, it wasn't really a struggle, but what I struggled with the most, I would argue, is when I was watching the charts, the lack of focus, the missing opportunities that I saw beforehand. That is my main focus for 2024. So full attention, full focus going into 2024. Now, with that being said, we have the dollar in a very nice potential state actually. And I quickly want to go over the yearly chart actually, just because of course we can do this one time in a year. So let's go over it. Right here, we have a yearly fair value gap sitting right there. Absolutely lovely. So what can a yearly fair value gap do? We can trade towards it and we can potentially trade off of it. So what does that look like? Potentially something like this. Seeing, of course, if we do want to actually do that by going into the lower time frame. Now, compared to the yearly, what is the lower time frame compared to the yearly? That's already the monthly, etc. So here on the monthly, what are we seeing? On the monthly, we have this monthly fair value gap right there. Now, is this monthly fair value gap, and that's what we talked about in the previous forecast actually, where we talked about price potentially wanting to close above this low right there, because that would allow price to set up very easily to then offer that fair value to then continue lower. Now, currently, it has not really done that, as in this candle has not really prepared price action to trade back into the monthly fair value gap to then continue lower this same exact month. It can do that, but Is it super high probability? Moi. Not really, in my opinion. So based on those breakaway gaps, which we'll also go over in market mastery a little bit more in depth actually, is that if we now go into the weekly time frame, then what do we have? On the weekly time frame, we also have this weekly fair value gap sitting right there with a weekly order block, which we are both respecting currently, seen by the wick right there. So the next candle, what I would want to see from the next candle is lower prices. That's simply what I would want to see. And if we do not get those lower prices, then again, that's a perfect indication that we are likely trading towards the monthly fair value gap right there. So again, we're always creating those if this, then that. Perfect. So here, the first target would be this right there. Why is that the first target? Because that prevents that weekly fair value gap from being created. That prevents any bullishness from being in the market right there. So that is the first target. Now, if we go into the daily, you can see that we have this daily fair value gap, which we came into later during that day. We also came into this swing high, which we actually swept. And currently we are in the middle. Do you remember in 2023, feels like it's a long time ago. Do you remember when we talked about the first resistance area? This right here is the first resistance area. Why is that? Because we are approaching a premium array and the first discount array. So what do you do in this situation? Well, what I like to do is I like to have the no resistance area. The no resistance area for me is when we can very clearly say, all right, we have nothing holding us back, meaning there's no PD array where we can expect a rejection anymore before we actually reach the target. So the target being first this, after of course these lows right there, after of course this yearly fair value gap sitting right there, and then after we have to reevaluate what it actually wants to do, of course. If we do not reach those targets this week, if we do not reach this target this week, for example, then I would argue, all right, now we can potentially look at the monthly fair value gap. Now, the way the economic calendar is shaped this week is also quite important. This is still one of the startup weeks. So what I always like to do in those startup weeks, and what I mean by that is volatility really died down during the New Year period, during the Christmas period. So it's slowly starting to warm up again. And then once the warming up, just like in sports, is done, we can go full steam again. Just like the volatility, it's slowly warming up again in these first few weeks. And then afterwards, we get the high probability conditions again. So during this week, we don't really have news, as in we have not the best news economic calendar week. So what I like to do here is I like to get back in sync with the market. That is my main objective for this week. Potentially just tape reading, paper trading, potentially. Just getting back in sync with the market so I can get back to my prime, essentially. And then from there, I can set myself up for success in 2024 as well. Because again, remember, it's a marathon, not a sprint. This is the same as I always compare it to a weekly analysis, where in a weekly analysis, what quick mentorship insight, I always advise if you're just starting out, there's no reason to get involved in a Monday or a Friday. Mondays and Fridays are not the best days to trade. In the general rule of thumb, just probability speaking, it's not the best days to trade. That same goes for December and January, where December is like that Friday, January is that Monday. Let's first wait a little bit, maybe wait the first 2 weeks, get back in sync with the market to then have an easy going the rest of 2024. That is what we want to focus on. And we can see with the economic calendar, I have the economic calendar in front of me right now. And on Thursday, we have CPI. Then on Friday, we have PPI. Now, on Wednesday, we have orange folder news. And Monday, Tuesday, we don't really have any news for the US dollar. So here, I would like to trade after Thursday, 8:30 a.m. When CPI drops, after that, I would like to trade. And then main action for US dollar for me is going to be on Thursday and Friday when actually trading. So right here, what I do want to focus on is, all right, can we now on the 4 hour, for example, respect this 4 hour fair value gap right there to continue lower off of that? Now, the reason I want to trade after that CPI event is because usually what you'll see is CPI, NFP, FOMC, they create the major swing highs, major swing lows in the market. So they create the major moves in the market, because it's like a smoke screen, right? It's like a smoke screen. It's all rigged. It's all corrupt. And they're going to do whatever they are destined to do, but they're first going to take out certain people, out that liquidity, which we talked about in Market Mastery, and then we move in the right direction. So what does that look like? Well, since we don't really have any news events at the beginning of the week, what could happen? Consolidation. We have this 4-hour value gap. We do not push lower from it because we don't have time supporting the ID. We don't have the fuel for in the car. So right there, we don't push lower, we do this, then we arrive on that Thursday, we do something like this, and then we continue lower. That is a very realistic thing that could happen, so be aware of that. That is why I want to get involved after CPI right there, because we don't really have news supporting the ID at the beginning of the week. So that is what I'm expecting for the dollar though. Overall, lower prices, unless we get, again, those bullish signs, then I want to switch it towards the monthly fair value gap right there. So be aware of that. Then with that into account, of course, the rest becomes a little bit easier. Where on ES, what can we actually do? On ES, let's first look at the monthly. Let me delete everything that's sitting right there. On the monthly, we are creating a monthly fair value gap, but we don't really have any context, any fair value gap just yet on the monthly. As in, yes, I can see this monthly fair value gap right there. That monthly value gap is really low for us to trade back into to then continue higher off of. Again, based on the breakaway gaps, right? This third candle right there is not really setting up price to trade back into it to then continue higher off of that. So if we go down the time frame and we go into the weekly, then what do we see? We have a beautiful example, absolutely beautiful, lovely example here of fair value, because we have this move right here. Let me show you the 3 swing move. 1, 2, and 3 sitting right there. So from this move, what is the only part that is not fair value yet? That is this right here. So we offered fair value currently. Can you see? Oh, wow, look at this. 2024 is treating us perfectly already. Look at this. Is that to the exact pip? That's why I love indices as well. Indices can be extremely accurate right there. That is minus 0.25, the accuracy. That is insane. So what we like to do, that is a very, I always see that, it's very funny, right? I can imagine someone watching us looking at that and absolutely going crazy off of that. Our my little nerd dream. Anyway, we have the 3 swing movement right there, and this is the only area where we haven't offered fair value yet. So once we make that retracement, there's no real reason to come back towards this gray box right there. So now we can continue higher off of that, because that is the area where we have fair value. Again, does that need to happen? First assumption is, yes, we are going higher off of that, because there's no other arguments to be made just yet. But if we do not do that, of course, doesn't mean we're wrong. Perfectly fine, because then we just switch the whole narrative, as in we're always operating in an if this, then that. So if we are not going higher off of that, then we are seeking liquidity, meaning that then we are continuing lower. Perfectly fine, then we just take shorts. So we always need to be reactive in that way with fair value seeking liquidity. But right here, we have a perfect example of fair value, and we can continue higher off of that. So what do you do? Well, on the daily time frame, do you have the ID of, or does the ID to continue higher right now actually transfer to the daily? Well, not really yet, because there's no real bullish signs just yet. So, excuse me, just with the weekly, what we saw is that we don't really have any bearish signs just yet. The same goes for the daily, that we don't really have any bullish signs just yet. So at that moment in time, we are currently still quite 50-50, right? As in we can still continue lower, can still continue higher a little bit. So here, you would want to wait for a little bit more signs in the form of fair value gaps higher to confirm the weekly fair value gap that is sitting right there as well. So that is my main focus for ES, mainly expecting higher prices as well, with the main target being, of course, same as the dollar, actually just inversed, where you have this and you also have this, and eventually you have the new all-time highs with first targeting that swing high right there as well. Because I do not think ES is making a top right here. I do think this is definitely aiming for all-time highs as well. So let's look at NASDAQ. NASDAQ is in the same exact situation right here. And it's again absolutely beautiful because we have the fair value area. And it all leads me back to everything we went over in 2023. And I'm just going to, it's sort of a 2023 recap. Where right here, if we take a look at this fair value gap right there, if we are not going higher off of this fair value gap right there, which is a standalone fair value gap, meaning it's one. So there's no other discount array overlapping with it. So that also means that this area right there, which is the area where we haven't offered fair value yet, that is something where we'll not go higher off of. Reason being is because simply said, this is also one. So if, again, if you can choose the amount of cookies you want, and you have one and one cookie that are the exact identical, and then next to that you also have two cookies, then who in their right mind, unless you were on a diet, but we don't take that into account, who in the right mind would not choose the two cookies, right? So here the market very simply said, one, well, why would I then choose, well, why would I not choose that one, and then I would choose another one? Why would I then not go to the two, right? So very simply said, price will seek that overlapping discount array right there if it does not continue higher off the first standalone discount array. So that is in perfect alignment with our fair value area as well, which is sitting right there. And of course, as you may know, and I think a lot of people already knew, but in the A to Z guide, we also mentioned it. When I mark out the wick and when I mark out the body, the wick is overlapping with a fair value gap right there. So quick market mastery inside as well, before we actually go over it in market mastery itself. So when I mark out the wick, it is marked out because there is a fair value gap overlapping. The point, the highest point of the wick is exactly overlapping with a fair value gap. If not, then I mark out the highest body right there. So then right there, we can continue higher off that with the same exact thought process as well. First thing we encounter is this daily value gap. So again, that resistance area, right? Expect some kind of resistance right there first. Then eventually we can continue and look to continue higher off of that as well. We need a little bit more bullish signs before we can go full margin with buys as well. On the 1 hour, could be ideal to have a new 1 hour value gap higher. Then on YM, I imagine it's quite similar. And if we start off with the monthly, then we see we are also creating monthly value gaps. This monthly value gap is again out of the conversation. As in, the reason why I state that and why it is so important is because a lot of people, and this was also me, right? Don't get me wrong. I'm just talking from experience. I'm not blaming anyone or pointing fingers. But right here, this fair value gap is out of the conversation. That's something we need to understand because otherwise we are left behind waiting for that monthly value gap to be somewhat tapped in next year, maybe in 2025, before we can actually get involved. No, we see a drawn liquidity that is very close. If we just simply measure this from a logical standpoint, we are closer to the drawn liquidity than we are towards that fair value gap. So that indicates to me that if price truly wants to take that high, then why would it now make a huge retracement towards that monthly value gap to then take the drawn liquidity? Doesn't make a lot of sense to me. It wants to do it very fast. So here, if we go into the weekly, we have a weekly fair value gap sitting right there, which we can tap into. Although, if we compare this to NASDAQ and ES and NASDAQ are more so already ready to continue higher, where YM then might follow and not come into the weekly fair value gap right there. So keep that in mind as well. If we do come into it, of course, absolutely perfect. So here on the daily, we don't really have anything just yet. Same for the 4 hour, nothing just yet. So if I was to trade the indices, then my eyes would go to NASDAQ and ES. But also DAX, because I do really like DAX right here. And let me delete everything. On the monthly, what are we seeing? Same thought process as on the other indices, where on the weekly, what do we have? Weekly fair value gap. Now, you might think, well, we already tapped into that weekly value gap. Yes, but we never tapped into the fair value box right there. The mitigation block, in other words. Because right there, that is where we are tapping into right now. And that is always what I would like to see, where if we have a small move above highs to the left, highs like this, and we create a fair value gap right there. Yes, we can continue higher off that fair value gap, but I would always like to see us coming into that fair value area right there, the overlapping part, because that adds extra confidence to my thing as well, where I would be like, all right, now I definitely think we can continue higher because we've offered the full fair value. Because the only area where it wasn't fair value was, again, this area above that high. So right here, we can definitely look to continue higher off of that. Very interesting price action overall. On the daily, we came into that daily fair value gap. Great sign that we did not create a new daily fair value gap lower off of that immediately. We are also sweeping this swing low, very similar to the dollar actually situation. And then if we go into the 4 hour, we have 4 hour fair value gaps sitting right there as well, which we can potentially look to continue higher off of. A really interesting price action as well. So 2024 is potentially, again, potentially, don't want to get ahead of myself, but potentially looking quite nice for the indices right here. Australian dollar, US dollar, which you can see I have added a green thingy, a green label right there, a flag, a green flag, because I have added it to my interest list because I am quite interested in it. Now, the indices as well, I am also quite interested in it. And the reason I'm interested in Australian dollar, US dollar here is because on the monthly, I think we can already look to continue higher. We can ignore again that monthly value gap right there. If we ignore price action on the lower time frame. So for example, on the weekly, we ignore this order block, we ignore this weekly value gap right there. Then we can look at the monthly value gap, but currently it's not super relevant. So we have this weekly order block that we're coming into, and we are by the looks of it currently respecting it. So if the dollar, and this is more so really determined by the dollar itself, if the dollar wants to continue lower off of this, off of the, what is it, the weekly fair value gap, weekly order block right there, same situation, just inversed, then Australian dollar, US dollar will do what? Will take off. So that is exactly what we can potentially take a look at right here. So this is very interesting. I do really like this price action. Huge wick right there coming into the fair value area, which is just simply said the order block as well. And then on the 4 hour, we have a 4 hour ST. Beautiful sharp turn, textbook sharp turn. So 4 hour ST, potentially continuing higher off of that right there, potentially even creating a new fair value gap higher to continue higher towards new highs. With the ultimate target, first target this week would then be that, and then after these highs right there. Very interesting price action again, and I do really like it. Australian dollar, US dollar. EU. Now, EU is all right, but I would prefer Australian dollar, US dollar currently, and the reason for that is because EU just doesn't have that super clear price action right here. And what I mean by that is we don't really have a weekly value gap higher. Is that a weekly value gap higher? Again, if I need to measure it like that, no, it's not. If I need to measure it like that, then I always don't take into account the fair value gaps. Then it's just too small for me, for my liking, and I just disregard, don't even use it. On the monthly, same situation. Now on the weekly, we don't really have anything. We have a potential order block, but other than that, it's no fair value gap to support ID, so that already makes the order block less probability, lower probability. So on the daily right here, we can also see this weird consolidation formation right there. So here, what I would like to see is just a new fair value gap higher if we want to actually continue higher based on the daily. Other than that, I'm currently just staying out of EU, and I would prefer any other pair. Then if we move on to GU, GU is quite similar, although based on the breakaway gaps, GU has a higher probability to trade into this monthly fair value gap than EU or Australian dollar, US dollar, or whatever it may be. Again, I do think we are continuing higher overall, meaning because we have disrespected a bearish fair value gap, and that's being disrespected by a bullish fair value gap. It's also a video that we made in 2023 actually, meaning that this fair value gap is high probability right there to trade off of right now. So if we do come into that, I would definitely want to see a higher prices. Now, is it a guarantee that we come into that? If the dollar already wants to continue lower, then this GU is not coming into that monthly value gap. So take that into account as well. So on the weekly time frame, we don't really have anything clear on the weekly as well. this would just add on to the ID where we could potentially expect something like this to then continue higher, in my opinion. So on the daily, we also don't really have anything super clear. So here I just want to wait. I want to wait. Do we actually want to trade towards the monthly value gap based on the 4 hour? 4 hour value gap is lower, for example. Or do we already want to continue higher based on daily value gaps higher right there? Then I want to get involved. So that is why I currently don't have it on my interest list. I want to wait until it shows more clear signs. New Zealand dollar, US dollar. Let's see. On the monthly, again, same situation. Weekly, let's see, weekly order block right there. Weekly for value gap as well, coming into the overlapping. So this is where if we want to continue higher, we will continue higher off of that. So right there, first target, after that target as well. And of course, this weekly value gap being created, preventing from being created as well, target. And on the daily time frame, we actually have a perfect sign. We have a very nice sign, and the very nice sign I'm talking about right there, we remove the targets, is this daily value gap, because we came into it already on a Thursday. Friday did not continue lower off of that. Perfect. So we don't have a new daily value gap, or at least the expansion phase being created. Absolutely perfect. So that is already a great bullish sign as well. So on the 4 hour, we have a very nice 4 hour ST as well. It's looking quite interesting. I'm actually going to add this to my interest list as well. Right there. It's looking quite interesting to continue higher off of that. Very interesting price action. USD Canadian dollar. Let's see. On the monthly, potentially, but that's going to take 24 days, potentially creating a bearish monthly value gap. And on the weekly, we have this weekly value gap, which we are not respecting. So my first thought process is, again, potentially the overlapping part. At least this weekly value gap potentially overlapping with these lows to the left right there. So if we can continue lower off that, and a sting into that could be quite interesting to then continue lower off of that. Now, this is just simply said in the exact same situation here on the dollar. So whatever the dollar is going to determine to do, USD Canadian dollar is just going to follow. So if we already see that it's not willing to follow through on this daily value gap right there, then what do? We go into the 4 hour to find our 4 hour value gaps lower, to then look for shorts right there if the dollar is also ready to continue lower already. So keep that in mind as well. That's currently why I don't have it on my short list, because it really depends on the dollar and what the dollar is about to do right there. US dollar CHF, this is quite interesting, and monthly, same exact situation. Nothing really interesting on the monthly on a lot of pairs. On the weekly, what do we see? We have this fair value box sitting right there, overlapping with that fair value gap right there. So if we can get a sting into that fair value gap, and sorry, I just mentioned it. Let me mark it out correctly actually. Right there. If we can get a sting into that fair value gap, into the fair value box, then we can continue lower off of that as well. So that is very interesting. I do really like this price action. If of course we can come into that fair value box, fair value gap right there to continue lower. Could be very interesting as well. That's why I have it on my short list. So currently it's still waiting for that weekly value gap to be tapped into. US dollar JPY. So this is not really interesting in my opinion, and the only target I can really see is the previous month's low right there. So on the weekly, how can we deliver towards that? Don't really have a weekly value gap lower. A very small one. Again, if I need to measure it like that to see if it's a fair value gap, then I don't like to use it, because that's just defeats the point of a fair value gap in my opinion. So if we then go into the daily as well, this as well, yes, we have bullish price action. So if anything, I can see the previous week low sweep right there, as in the previous swing low that is being swept right there, to then continue higher off of that. Other than that, does that make a lot of sense? No, because if the dollar wants to continue lower, then what will USD JPY do? Continue lower. So potentially we can sweep this high, I would argue. So there's a lot of potentially this, potentially that, potentially this. In other words, I can't get to a clear bias. In other words, it's a very 50-50 price action for me. So I do not want to get involved right here. So that's why I don't have it on the list. And this is probably one of the lowest, I would argue even lower probably than EU right now, because I just simply very weird price action, can't really see what it wants to do right there. And I don't want to even force an ID. Then if we move on to silver, now both silver and gold, and we had quite a few questions before coming into the weekly forecast, where what is gold doing, what is silver doing? And that's a great question. That is a great question, because I also have no idea. No, wait, let me go over it right here and fully explain the situation. So silver, we swept this monthly swing high right there. We came above the previous month high right there, and potential target is this previous month's low. Now, the first thing, and this is the reason why I go for the dollar as well, the first thing I do is, because the dollar will tell us a lot. The dollar will tell us if the majority of the pairs actually want to move higher or move lower. So here, if the dollar wants to continue lower, then silver, is it very likely to actually continue lower? No. So the targets already there don't make a lot of sense. So on the weekly time frame, let's see that weekly swing low right there. Now, the only reason then what I can think of is, if we do want to target those, then why are we targeting those? We are targeting those to take liquidity to potentially continue higher. So price, in other words, is just seeking a discount array to then continue higher off of that. So that could be quite interesting. So on the daily as well, we have this daily fair value gap sitting right there. Now, if we can get below this swing low, sitting right here, and we can sweep it to then continue higher off of that, that could be quite interesting. If in another world, if we already create a daily fair value gap higher off of that, or even start to disrespect it, meaning on the 4 hour, we create bullish 4 hour fair value gaps right there, that could also be quite interesting to then eventually take a look at longs. So overall, it is quite 50-50, and I have to be honest in that as well, that silver and gold is definitely not something I would bet my money on currently. So simply said, it's not something I would trade currently. So this is where I want to wait a little bit for more clear signs as well. And the exact same goes for gold, where gold is still a little bit stronger than silver, but it is in a quite similar situation. Monthly, we don't really have anything going on. If anything, again, we are in that same trend of sweeping those all-time highs, right? Where, can you see the same exact thing? It's constantly sweeping those all-time highs, then returning, but it did sweep the all-time highs, and then it made a sort of a rejection right there, continuing higher potentially, creating a weekly fair value gap, which we are currently not even respecting. So we are not wicking it, we are just closing fully below it, which is also not a great bullish sign. So here, on the daily time frame, we have this daily fair value gap right there, and we have this daily swing low. So we are in a battle. We are in a battlefield right there, where everything in between this price action right there is what? Is 50-50 price action. And in the meantime, if we get 4 hour fair value gaps higher or lower, that would be the determined direction right there. And that is the direction I would want to trade in. So in the meantime, I also simply said, wait, I do think we can still continue higher, especially with the dollar as well, potentially continuing lower. So here, my favorite side, let's call it like that, my favorite side would be bullish. I would love to see bullish prices overall on gold. Then if we move on to Bitcoin, now Bitcoin hasn't done anything, to be honest, since we last reviewed it, and that's typical Bitcoin as well. But on the weekly, we still have the weekly value gap. We still have this messing around. We still have no real clear daily value gap. Well, we had that one, which completely disrespected as well. So overall, I do not want to do anything just yet. I do still think, again, we are bullish. We just need that clear discount array that we can actually continue higher off of. So potentially, the conversation of new all-time highs are definitely very realistic still. So here, these highs right there, that swing high, and eventually this all-time high, that is still very, very realistic, and I do quite like that. Then crude oil. Now, crude oil is quite interesting, and I do also really like crude oil right now. So what you see here is that I have marked out a few things, and let me delete them because I'm going to mark them again. On the monthly time frame, we have this monthly fair value gap, which we can potentially trade into. We are not too far away from it. That's the point I'm trying to make. We are not too far away from it, so we can potentially trade back into it, depending on what the weekly wants to do. Because if the weekly right here, we are seeing this weekly fair value gap, which had two chances, and I'm talking about these two chances right there. had two chances, if it wants to load, had two chances, 1 and 2, to create an expansion phase of a fair value gap lower. So it did not do that. And right now we are seeing on a third chance, what are we seeing? We are seeing a bullish candle. So here my thought process is, we are now targeting that monthly fair value gap sitting right there. And that is the same with the dollar, for example, where we also saw the weekly and the monthly fair value gap. The same exact thought process right here, where if we do the same thing, we have two chances right there to continue lower. The first chance already happened. The second chance is this upcoming week. If that doesn't happen, we are targeting the monthly fair value gap. That's the same with crude oil right there. So right here, if we can continue higher, then let's find a fair value gap that we can continue higher off of. Daily, not too clear, but we have the same exact sign again. Fractal, right? Fractal sign right there from the daily into the weekly as well. So on the 4 hour, let's see. 4 hour, we have nice movements higher. Fair value gap and small fair value gap right there. Can we continue higher right here to target the monthly fair value gap? That would be ideal in my world. And I do quite like this. I do quite like this. All right, Nifty. Nifty has been in the same situation for a long time. And what we've done on Nifty basically is waiting. And the reason for that is because in a situation like this, where a price action and price itself, the pair and the instrument we are trying to trade has made new all-time highs, and there's nothing to the left to target. At least nothing that I can see. So in this case, there's just not a clear target anymore. There's no clear drawn liquidity. So the bias can be bullish, but a bias is direction and it's also drawn liquidity, meaning it's also premium rate that we want to target if we are being bullish. So if we don't have that, it's quite easy, or it's quite difficult to say when we want to stop trading. That makes it quite difficult. So here, I would want to wait for a retracement, which we had on the daily right there eventually. And then we have this small retracement into this new order block, fair value gap, to continue higher off of that. That could be very interesting. Although I personally always prefer, in a case like this, wait. Because either it feels like we're trying to chase price or we're trying to call a top in the market, which is neither of those two things is what we want to do. It's very important to understand as well. All right, that is the forecast. Whew, what a forecast! What a forecast! that has been a while. I miss doing it actually. I miss doing it. Love you, perfect. Love you too, Dai. I love you too. I would like to join the masterclass as well. Oof. Oh, let me stretch a little bit after this long forecast. I believe if you type mentorship or something like that in the chat, you get some information, but I'm not sure. I haven't set it up correctly. So the best thing you can do is navigate to ario.io, and the best thing you can do is, if you have questions, and please, I want to clear this up. And make it very clear, is that please do not join the membership on impulsive action. As in, that's not what I want. I purely want the people that actually want to commit to it long term. So if you have any questions about the mentorship, then please, let's clear that up first before you decide to actually join the mentorship. So here, info@ario.io, that is where I answer questions, etc. And we can go over certain things. So please, let's clear everything up before you actually make an important long-term decision as well. I believe my stream elements hasn't been set up clearly. So the what is the exclamation mark mentorship is not working, but I'm not sure actually. Need to check it after. Let me see. What's the lowest time frame you will look at seeking fair value? It's a great question, Brian, and that really depends on the overall context, because the 1 minute is also where I would use it for entries, for example. So that is the 1 minute. But on the reason I went on the higher time frame mainly is because we first start off with a bias and finding out where we actually are going. Are you going to save the stream? Yes, for sure. If you go to my YouTube, there is a videos tab, and there's also live tabs, community tab, things like that. But under the live tab and in the live playlist, there are all the live streams. So they're saved. Yes. Can I ask you a question? 100%, my friend, 100%. Leon, can you briefly explain when to use the bodies or wicks when looking at the fair value box? For sure, Leon. So right here and right here on Nifty, what would we do? Well, what is the fair value box? The fair value box is, again, another word for a PD rate that we've already gone over in the A to Z guide. So the fair value box is either a breaker block, a mitigation block, or an order block. So that's just a quick insight. But this right here is the fair value box right there. So why do I use the wicks instead of the bodies? Because the absolute tip of this fair value box, of the order block, and this is with any PD rate, so this is also with breaker, mitigation block, and with an order block, the absolute tip right there of that, let me mark it clearly. I want to mark it very clearly right there. The absolute tip of that wick is overlapping with a fair value gap, perfectly overlapping. So in this case, we would want to use the wick and mark out the wick. And there's a reason for that. And the reason here, and let me find another example actually. Let's see if we can find another example on Nifty itself, because there is a very clear reason for that as well, which is quite interesting to go over. Yes, perfect. So here we see another wick right there. This wick is also sitting right there, also a fair value box right there in first instance. Now, why does this one not hold? There's also a reason for that. But why do we not mark out the wick? Because it's not overlapping with the fair value gap. So here we mark out the body right there. So we mark out the body, and the reason for that is because the wick and this area has already been mitigated. Why is that? Because it's already been traded back into right there. That's why the fair value gap and the wick are not overlapping. Where here, let's see. Here it hasn't been traded back into because it was just one full steam higher. It was just fully momentum higher. That's why you use the wick and the body in that case. Damn gaps. Yeah, the gaps in Nifty. Always. I missed them though. I missed them. Can you check GBP Australian dollar? For sure. If I do miss any questions again, then excuse me for that. Sometimes it's a bit chaotic to go over everything. So I try to do it. It's nothing personally. I don't hate you. I don't ignore it. I just don't see it. So please understand that as well. I have it on my waiting list, actually, GBP Australian dollar. I have it on my orange list, which is my waiting list. So I am interested in it. And the reason for that is what I'm going to explain right now. On the monthly, it's not too clear to me. The only thing I can really see is that we have this swing low, which we are potentially sweeping. On the weekly, we are coming into this order block as well, which is quite interesting. And we do have a weekly value gap sitting right there as well, which we are currently respecting. So on the daily, we can see a nice consolidation, which is, of course, if you study a textbook market maker sell model, you always need to have that consolidation, which I do not necessarily need to have, but it is a nice confluence. So here, if we can continue lower, and the reason I have it on my waiting list is because now I want to wait for 4-hour and daily fair value gaps lower to potentially target these lows sitting right there. So that is my thought process on GBP Australian dollar. When do you consider fair value gap got filled and not valid anymore? Because I noticed that fair value gap get tapped many times. That's a great question, and I really like that question, and it's something we are going to go over in market mastery as well. And there's two ways we can see that, and let me go over it. Here on ES, right now, this is when the fair value gap has been used up. Simply said, when we have traded into a fair value gap, the fair value gap has been used up because we should immediately expect higher prices off of that fair value gap. If we do not get higher prices immediately off of fair value gap, it is because in this candle, that weekly candle right there, we likely came into that weekly value gap later on during the weekly candles formation. This is fractal, so it's any candle right there, right? So here, the only thing we can now use still to continue higher off of that is either the overlapping part, of course, or the previous candle low right there. And I say previous candle low deliberately because it doesn't need to be a previous week low, doesn't need to be a previous day low, it can also be a 1-hour candle low, previous 1-hour candle low. And if we do not continue higher off that, then simply said, the fair value gap is used up. So here, if the last line of defense actually, and the last line of defense is in the last line where we actually can continue higher from, in my opinion, is that previous week low. If we do not continue higher off of that, then this fair value gap is just fully gone, and we are either going to continue higher off of another discount rate, but not off of the fair value gap anymore. So that is the way I see it, which is again, well, actually quite simply said, it's whenever we come into it, that is already when it's used up. So here, for example, this fair value gap is where we immediately would want to see a rejection right there. And that is when we use the fair value gap. So after this candle alone, after this candle, you would not want to see a retracement back into the fair value gap because it's all been used up. So if we now retrace, we are not offering fair value anymore. So we are seeking liquidity right there. So that is when the fair value gap has been used up. If that makes sense. Hopefully that makes sense. XAU JPY, please. Senpai, Jesus. All right. XAU JPY, just because it's such a weird pair, I want to go over it. Not because you called me that. Let me see. All right. Let's see. On the monthly, we have this monthly fair value gap sitting right there, which we can continue higher off of. And it's the same thought process again. This monthly fair value gap has now been used up. So if we want to continue higher, then we should already continue higher on this next candle. And this being the last line of defense right there. Although I would argue that right here, we definitely already want to continue higher if we do actually want to do that. If we don't get those signs, then we might want to continue lower. So here on the weekly, we also have this weekly fair value gap sitting right there, which is also being used up right there. So I would argue that currently we are still in this 50-50 area where we have both resistance from the weekly and from the monthly fair value gap. What I do in this situation is I wait for a daily fair value gap higher or a daily fair value gap lower, which we can already see we have a daily fair value gap higher right there. So this could be very interesting actually. I do quite like this. This is looking better than just normal XAU USD itself. Very interesting. Yeah, exactly, Bhagat. Exactly. Very interesting. The daily is where I would argue this, and the 4 hour is, I would stick to the daily here. Would not necessarily go into the 4 hour, would stick to the daily. Very interesting. ZB for sure. Oh, I haven't done the bonds in quite a while, to be honest. Let's go over the bonds. Let's go over them. Let's see. Of course, the bonds are very important to understand where they might actually want to go. So first things first, what I see on the monthly, let me actually check the yearly really quick. Do we have something on the yearly? Yes, we do. We have a yearly fair value gap sitting right there. What is going on here? We swept that swing high, created an ST. So overall, this ST is where we can continue lower off of on a yearly basis. So next few years, we might continue lower. 2030, I'll see you everyone there, and we'll discuss if we were right or not. So right here, this whole area is a fair value box, right? So we could potentially continue lower off that. But what I didn't go over yet, and we are going to go over later on in Market Mastery, so it's a quick insight, a future insight already, is when you have this fair value box and you have a fair value gap on the time frame above it, meaning that this fair value box is on the monthly. This fair value gap is on the yearly. The yearly is always the stronger time frame. So the higher the time frame, the stronger the time frame in this case. So right here, this is where I would expect price to come back to right now, ignoring the fair value box. So instead of expecting that fair value box to hold, I would now expect us to seek liquidity in the form of these highs right there, which is also confirmed by us not respecting this fair value area right here and creating a bullish fair value gap into it right there. Monthly fair value gap, which is still taking 24 days, so it's a bit prematurely. But on the weekly, we can look to potentially continue higher off of that as well. Right there. Very interesting price action, actually. Very interesting price action to continue higher off of that previous week low sweep, potentially overall. And I won't go too much into the low time on ZB, because the reason I go into ZB myself, and I assume that's also the reason why I ask it, it's because to get a clear long-term view. And the long-term view for me would be here. Well, long-term would be bullish, but then after the yearly fair value gap has been reached, which is likely going to align with the dollar as well, reaching the yearly fair value gap, then I would be bullish on the dollar and bearish on ZB as well, on the bonds, right there. Lovely. Let's see. Ario, would you make a Discord community for us YouTube students? Yes, I would. I have announced that as well in previous forecasts. Now, I do want to come back to that. That is currently stalled, as in it's currently a little bit delayed. So I want to fully see how I want to actually approach that as well. So currently it's a little bit delayed. So excuse me for the fake promise as well, you could call it, but it's currently delayed. So yeah. How long have you been into the market, Ario? what is it? Almost 4 years right now. Almost 4 years. 4 years. 4 years of doing this every day, looking at the charts every day. Doesn't bore me yet. All right, who's the dude in your profile picture? Yeah, it's not me. I have no idea who it is. I found it when I started off with trading, and I think it tells the trading story perfectly, right? In the profile picture, a guy playing chess with his own mind, with himself, with his own mind, overcoming his own mind in trading to eventually become profitable. That's that's mainly it. Are you able to include the cross in your forecast, or is there any reason why you don't cover it? And it's not a specific reason. The main reason is because otherwise we might be here for hours. But if you ask a specific cross pair, then I would be more than happy to go over it as well. Is it effective to use external and internal range to find buys? 100%, and something we are going to go over in Market Mastery as well. It's a simple cycle. So the cycle we went over in liquidity to then fair value, that's exactly what we went over as well. Siva, yeah, on the website itself, it says when the next enrollment is also opening. For sure. Why has the NQ CFD already taken the all-time high? That's a great question, Adele. And the way we view CFDs, and well, not really the way we view CFDs, but CFDs is not real price action. And what I mean by that is that CME price action, so this NASDAQ, the NQ, the E-mini NASDAQ futures right there, is the quote-unquote official price action. So what you'll see on an 8 cap, for example, is that this is not real price action. And what I mean by that is 8 cap and CFDs in general, brokers can create their own price action. So every broker with a CFD is completely different. Where, for example, if we now look at NASDAQ on, let's actually find US 100, which is also NASDAQ, on capital.com, it's also different price action right there. And the numbers are completely different. That's because the broker essentially creates their own price action right there for the CFD, and they are allowed to. So that is why when you trade CFDs on a prop firm, for example, and you compare to the futures NASDAQ, it's completely different. So I would always go off of NASDAQ, ES, NASDAQ, and YM sitting right there. This is my main thought process. Which again, I do not think is necessarily wrong, because then you will still get to you will still get to trade IDs, great trade IDs through capital.com, for example. The thought process is still the same, as in you're still just trading whatever you see, where we might see a sweep right there and we might continue lower. Who knows? You might be right there, and we might actually continue lower overall. So the thought process is still the same, where you just, it's just a different story, but the outcome is likely the same. Is it great to trade other pairs, or should I stick to a single pair and put all my focus into it? That's a great question as well. And the way you want to see this is, we in the mentorship, we teach both trading plans, where you can choose if your personal preference is focusing on one trading pair or focusing on multiple. That really depends as well on your time schedule. So what is your time schedule overall in life? Do you have to do something besides trading, etc.? That's perfectly fine. Where if you focus on multiple pairs, then you need to be able to align the time frames correctly. Meaning, if I focus and do a forecast on all these pairs, you will see I don't go into the 15-minute time frame on every single pair when I'm doing my bias and my analysis. That is just going to take away a lot of focus, a lot of attention. If I need to do that for every single pair here, and then for all the crosses as well right there, that's way too much. That's not going to be beneficial. So you are more likely going to stick to the higher time frame as well. You are doing more upfront work when you are trading multiple pairs, because the way I see it is usually people that have something to do, have a job next to it, which of course there's nothing wrong with it. So don't follow that stigma as well and that taboo. But if you have a 9 to 5 next to it, or another job, another business next to it, then higher time frame and following multiple pairs might be very beneficial, because it's more upfront work. But when you actually trade it, it is less work. Where focusing on one pair, so focusing on one of the indices, for example, is where you can now go into lower time frames, where you can go into the 1 minute time frame even, which requires less upfront work, but more work during the fact. So here, if you have, for example, a lot of free time, then you can allow yourself to have 3 hours a day to only focus on ES, for example, where you can also go into the 1 minute time frame. So really depends on your time schedule, as well depends on your personal preference and your current situation in life. I've done both of them, and I focused on ES, DAX and NASDAQ, for example, for a very long period of time, where I only focused on one of those. And it was really beneficial to me at that time, but currently I find it more beneficial to focus on multiple pairs. So it's not a better thing or a worse thing. It really depends on your personal preference as well. When is the next episode of Market Mastery? I'm already in love since the first video. Love it, love it, love it. The next episode is on Tuesday. So the schedule as well. I didn't mention the schedule, I believe. That's amateuristic from my side. Excuse me. I'll put it out after this video as well. But after the live stream, is that the schedule currently is Tuesday, Friday, and Sunday. And Sunday, of course, the live stream. Tuesday and Friday is just the videos. This is a great question, Abdullah. How could I do bar replay backtesting to collect more data about the edge? It's kind of tough because we are more discretional. What's your advice? Yes, this is a great question, and it's very sort of controversial because I can see, and I went over this, I believe, in a previous forecast as well. I'm not sure, or it was in the mention, but I can see the benefit from backtesting. As in, don't get me wrong, I always am a big believer that you should not backtest and you should avoid it at all costs. Using the replay tool is dangerous in my opinion. Unless you are trying to do something in hindsight, so hindsight backtesting, I fully agree with that. But actually going through the chart like this and then trying to actually trade it, etc., placing your entries, for example, using tools that allow you to do this, extremely dangerous in my opinion. Stay away from it. I can see when you get used to your trading plan, I can see the benefits for it. So don't get me wrong, but the trick right there, or the dangerous part, is that what you mentioned, Abdullah, is very true. As in, it is quite hard to gather data through backtesting because, in my opinion, my trading plan and the way I teach it always is we are 80% mechanical, but 20% discretional. That 20% is where the potential is. As in, that is what allows our win rate to be so high. That is what allows our RR to be so good, allows our overall returns to be great. Where the mechanical part is just our guidelines to keep our emotions in check, to not do something crazy. Where I know when I go into the chart, I know I need to do this, 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 and this. So the data backtesting is, in my opinion, not going to be very beneficial. Where I would rather, and what I've always done in the past as well, is I gather my data just by simply actually trading, just by live trading it, just by seeing, by tape reading the price action. Because backtesting is just not, it's just not realistic. It's just not realistic. Where hindsight backtesting is great, because hindsight backtesting, and this is what you'll see me do a lot during series, is because hindsight backtesting allows us to get familiar with price action, allows us to see certain patterns over and over. Where live backtesting, as you could call it, we're actually using the replay tool, is the opposite, because that is when you are trying to sort of recreate a live environment for trading, but you are not recreating it, and you are more so building unhealthy habits. And it's very dangerous to get stuck in a data backtesting cycle, where a lot of people in social media, etc., they just try to sort of show off their data through FX replay or some other tool like that. You used to have another tool with MetaTrader, and they try to show off their sort of quote unquote skills through data collection, which doesn't make a lot of sense to me, because I don't think we're in here for data collection. It's a great mental boost, as in it feels like you're doing something, but you're not actually doing something. I would always advise, to get back to your question, I would always advise live data gathering. So just live trading and live data gathering. That's the best way to collect data, in my opinion, because that's going to be the most accurate as well. Let me see. Salute Ario, just watch Market Mastery, love the content. Will you be doing weekly analysis live from now on, or is it a one-time thing? Live every single week, my friend, every single week. For sure, for sure. Love to hear it, by the way, love to hear it. With respect from UA, love to see it, Esbern, love it, love it, love it. Love it, absolutely love it. You should try trading live on YouTube sometimes. Can you? I can, for sure, for sure. And I've had positions running in the past on YouTube. I have not executed live on YouTube though. And believe me when I say I would love to do it, but it's the way I see it, and I'm going to try to explain this as clear as possible. I would need to do a lot of live streams to actually show a live trade, as in there's not an opportunity for me every single day in the market. So for me to sit there 3 hours and basically nothing going on, because I don't stare at my chart very long. For me, when I'm trading a full day, so a full Tuesday, for example, I set my alerts and I only look at the chart realistically maybe around 15 minutes to see if my PD rate has been hit, to see if my entry pattern has now formed. So it's a very boring live experience. That's mainly it. So I can do that, of course, but it's going to be extremely boring because there's just simply not a lot going on. Let me see. For my first market mastery, can I say completion of a market maker model offers fair value? So we look for a new liquidity sweep or new original consolidation before our next market maker model context. Yes, Don, I hope someone noticed that as well. And yes, that is very, very good actually. Very good understanding. I like that a lot. For sure. I like that. Exactly, Alex. Thank you for that as well. Exactly my thought process as well. What is the 20% part of discretionary? That's a great question. And to go over that is the guidelines right there is one of my most underrated videos, I would argue, is the trading plan. How to create a trading plan. It's the foundational levels. Those foundational levels allow us to have a guideline in the market to actually know what we are doing. To be able to define a bias. And that's what we're going over in next videos as well. And what we previously touched on in the market mastery video is we need to be able to define bias, define things, define liquidity, define fair value, define narrative, define context. And when we define those things, becoming mechanical is quite easy. But we don't want to be fully mechanical, because from my experience, I've also tried to trade fully mechanical. Where fully mechanical, there needs to be almost 1,000 rules to take into account every single market movement. Where fully discretionary is also not beneficial, because then you have no idea what you're doing when you come into the chart. So there's always going to be some kind of guidelines. Even when people tell you they are fully discretionary traders, they are not. Because in their mind, they just simply haven't worked out what they are actually doing when they are going in a chart. It's the same when you say, I don't know what I have for breakfast. But if we look at what you ate for breakfast over the last year, there's likely going to be some kind of routine that you had. You always have eggs with toast. All right, so you just simply haven't worked it out yet. So everyone that is saying that they're trading discretionary, that's simply not true, because you are doing something that can be repeated on a repeatable basis. So then that leads me to understanding, all right, 80% is mechanical, so 80% is guidelines. I understand what I'm doing when I go into the chart. I can write it down, I can define it. Then the 20% is simply what we can't foresee happening. So the guideline is very simply said, bias, narrative, bias direction, narrative, if we are going higher, where are we going higher from? So here, the bias is bullish, narrative, if we are delivering there, it's this weekly fair value gap. Then the context is this weekly value gap towards that weekly swing high right there. That is where I can potentially look to get involved. Then the entry pattern, etc., is, for example, 1 hour, or the 4-hour ST right there, risk management. The 20% discretionary is, all right, but how are we closing inside that fair value gap? Where is the fair value area? Where is the next fair value gap being created, for example? All things we don't need to define, we don't need to make mechanical, and we don't want to make it mechanical. Because when we do make those things mechanical, we destroy the potential of that. And when we keep that like that, then the way I see it, and it goes very in depth, and that's why I can't give you one simple answer to it, because this is the whole mentorship essentially where we go on about this, is the way I see it, your mechanical questions. So if we are going higher, where are we likely going higher from, should be in line with your discretionary trading. If we are going higher, where are we likely going higher from, is a question I ask myself, because that leads me to a chain reaction of thoughts that go off in my mind, where I can now understand how I want to trade this from a discretional perspective. Where right here, if we are going higher, where are we likely going higher from? Well, we have this fair value gap, which we disrespected, then we're likely coming into the overlapping part. We are currently respecting the fair value box right there, which we can continue higher from. Do we have fair value higher just yet? No, not really. So those things are all things that come to mind eventually. That is the discretionary part. Discretionary is built, and this is very important for me to mention. Discretionary trading is built through experience. No one can teach you, no one, yes, they can give you details, insights, but there is nothing that will teach you fully discretionary trading, because discretionary trading is a very personal thing. It's all up to you in that sense. And it's achieved through trading chart time. It's achieved through chart time. So discretionary material, discretionary concepts are learned by your own, are learned through your own chart time and through your own trading as well, through your own experience. And then the mechanical part and the details leading you to eventually set up for discretionary trading is done through a mentor or whatever it may be. Can also be done through yourself, of course. Then likely when you just start off, you have a lot of guidelines that lead you to a trade ID. Likely when you also start off, and this is why a lot of people keep on being in that shiny object syndrome cycle, is because when you just start off, you have guidelines for you to get to a trade ID. The mechanical part is then set. So you are likely only trading mechanical, which is why it does not work that well when you're only trading mechanical. That is where now chart time comes in. And when the chart time comes in, the mechanical concepts you learned are now can also be approached from a discretionary point, where you'll now from experience know, hey, if we come into this fair value gap like that, then that is not a high probability fair value gap. Why? That is just my experience. So that is how you actually, that's the whole trading explained. Let me know if that makes sense, but that is the way I view it. Other than that, I do have another meeting to attend to as well in a few minutes. So I am off to that. I want to thank everyone for being here. Thank you everyone for showing the love. Thank you everyone for a great new year as well. And let's make it a great year. Let's make it a great 2024. Let's absolutely smash it. I'm going to do my absolute best to help you succeed as well. So let's do it. Let's do it. I have no other words to say about that. All right, perfect. Thank you everyone. Love you all, and I'll see you at the next one. Perfect. Tuesday, market mastery. Thank you.